Welcome to Mortgage Matters with the Niles team, how we can help turn your mortgage into your pathway to financial freedom one step at a time. We're going to talk about, are we in a housing bubble? Are we about to enter a housing bubble? Let's go through this because we're definitely not in the same environment as 2008. For a lot of us that remember those times, it's been 15 years now since we entered a huge crisis in the mortgage arena, but it was based on a lot of factors that are currently not present. And I'm going to share my screen and go over. We're getting a lot of questions right now from past clients like you on, are we in a housing bubble? Where's the market trending? And do I need to be worried about anything? And while we can't predict the future, we want to be able to remove the emotion and the noise that we're seeing on the internet, mainstream media. Let's talk about actual data, facts, and statistics, and you can make your own decision on where you think we're trending. Again, we can't predict the future, but ultimately, our job is to provide as much education to you as possible. And you can always reach out to our team with anything that you need. We're happy to go over your specific financial situation, do a mortgage fitness checkup, just like you go to your dentist or doctor once or twice a year for a physical or a cleaning. You want to be able to make sure that your current mortgage fits into your short and long-term financial goals. So let's go through. Recession is likely a term you've heard or are going to be hearing a lot more of in 2024. As of this recording in October of 2023, since 1960, we've been in 9 recessions. You can see it highlighted in that dark blue grid line there in those subsequent years. And then in the white line is the Case-Shiller index on what housing prices have done since 1960 up until middle of 2023. And if you look at the blue grids during recessions, what's happened to that white line? Well, prices of homes have actually stayed flat and with a strong foundation, or they've went up in all recessions outside of one. So of the 9 recessions that we've been in since 1960, 8 of them, house prices didn't actually go down at all. They stayed the same or went up outside of 2008. And that's what we all remember. And the reason why we were in a recession is because of the housing market created the recession, not vice versa. And so let's look at over time. We saw a huge drop in household formations back in 2006 and 7. And so the blue is household formations versus completions of homes in orange. So any new construction, any available inventory was highlighted in orange. And the blue is how many household formations were in existence that could go out and buy or rent. And you could see back then, there was much more inventory of housing completions available than household formations. A household formation can be somebody that just graduated college and they're going to go buy their first house. They've now created a household formation. Or, married couple gets divorced, unfortunately, and they've split, and now they go find each their own place. Now they've created 2 household formations when previously there was just 1. And so back then, there was the supply versus demand was totally skewed versus today. When you look at 2022, 2023, we have currently much more demand than supply. The demand is the blue, the supply is the orange. Much different climate now than back then. And when you look at US births by year, if you were to look at the average home buyer, first-time home buyer is 33 years old. So back in 2006, that would have equated to people born in 1973. Well, look at the births during 1973, subsequently after, was some of the lowest we've seen in the last, 60 to 70 years. Well, what happened back then? That was when abortion was legalized. And Roe versus Wade and all that happened then. So you saw the birth rates in this country a lot lower. Well, when we look at the households now of people that are now 33 years old in 2023, they were born in 1990. Look at the births by year back in 1990 versus 1973. The point being, there's a lot more bursts that happened in 1990 than 1973, which now they are currently at the first-time homebuyer average age of 33 years old. In 2023, you have a lot more people wanting to buy real estate right now, which is why you're seeing the inventory issues we've been seeing out there nationally the last several years. It's too many people that want to buy, not enough homes. It's kept prices elevated, and we are just have a classic econ 101 supply and demand issue. And when you look at, 2008, when the homeowner vacancy rate, that was when it was spiked at, 20 some year highs. Same with rental vacancy rates. We'll look at now in 2023 at the end of those graphs, we are at historically low vacancy rates on the rental side and the homeowner side. And so when we look at existing home inventory, back in 2006, 7, 8, you had 4 million homes available in 2007. Right now, we have slightly over a million. We're 75% less available inventory than we had back then. Again, this is no surprise to all of us that have seen home prices skyrocket. But when we look at, are we entering a housing bubble just like 2008? Well, the dynamics are much different now than they were back then. And that's the point of us going through this data, because we're seeing a lot of stuff in the media. Housing prices are going to plummet. Who knows? If unemployment ticks up by a lot, then yeah, you can start to see some softening in the real estate market. But right now, that's not the case. And so existing home inventory, the real story. We currently, again, have about 1,080,000 homes available. 466,000 of those homes are currently under contract, meaning they're not really available for you to go find and buy on Redfin or Zillow. And that leaves you with about 614,000 homes that are active listings nationally right now. Okay. And so when you look at that, 614,000, this was May of this year, and the data is always a couple months behind on what we're able to get. But again, we're at historically low inventory with active listings. Running this back out to 2016 to now, you can see that again the inventory on a relative basis is very low. And so when you look at real estate overall from 1942 up until last year, 2022, if you're a heavyweight boxer, I would not bet against the champ here. Real estate has a 73-7-1 record since 1941. Back in 1955, real estate didn't go down in value, didn't appreciate it. It was at 0%. So there's the one draw there. The years that we think about when real estate dropped was 2007 through 11. And that's what we still hear about from, our own personal experience, or maybe friends, family, coworkers that bought and they got totally wrecked during that time because real estate dropped over 27% in a 5-year period. But if you would have thought that, in 1990 or 1991, that real estate was going to continue to drop and you waited to buy, you're seeing a large run of appreciation in consecutive years there where you're missing the market. Whether you're looking at buying something else or selling, a lot of this has to come down to real estate over time does really well on a yearly basis. Yes, there's been a couple years where real estate's dropped, but overall, a lot of people that have held off buying have been sorely disappointed and frustrated waiting for the market to correct and come down when prices continue to go up. And when we look at during COVID, 2020, 2021, that's the insane, numbers that we saw in appreciation over those couple years, with everyone trying to move out of the areas they could work from home. They were moving to different, parts of the country, and you had a lot of issues with inventory and a lot of people wanting to buy with historically low rates. That was insane. But again, over time, real estate typically goes up on an annual basis. So, kind of these bullet points here, looking at history, 1943 through 1947, prices compounded 118%. Then they went up for 43 straight years. And, 2020 and 2021, like I mentioned, prices going up does not mean that really there's a crash ahead. We might just see more subdued growth. But this is a really, really crazy stat and graph that a lot of people don't realize when they look at real estate throughout history. It's performed very, very well. From 1974 to 79, prices went up 93%, and then they went higher for 10 years before only going down 1% in 1990. Then they went up another 14 consecutive years. And again, we all focus on 2007 through 11, and that's where the pain came. And we still talk about it with movies like The Big Short and all that, but that's not, again, normal throughout history. So 2007, again, we had 4 million housing starts, and currently we have over 1 million homes. Again, a massive difference in current available inventory to buy, which is what's keeping prices elevated. Everyone focuses again on that 4-year span from 2007 to 11. Back then, much more inventory was available, not as much demand. That's not the same at all today. Demographics with birth rates, a lot less people were born in the early 70s than in 1990. So you had a lot less available buyers to soak up that demand in 2007 through 11. That's not the case at all today. And then also remember lending standards back then. If you could fog a mirror, you could get a loan. That's not the case now. You have to document and prove you can pay the loan back on a monthly basis. Back then, again, I was in the industry at that time. It was utterly insane on how little you had to provide in documentation. You could have a 580 credit score, bankruptcy yesterday, get a loan today. Much different. So we can't compare back then to today. It's totally apples to oranges. Home prices are turning higher. This is Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow. These are 5 large data aggregators throughout the country for real estate. And in January of this year, prices went down. But since then, February, March, April, running it out till May, third quarter of this year, prices have gone up consistently throughout 2023 outside of the beginning of this year. And so I think we're going to see around 8% appreciation on average nationally when 2023 ends. So again, all the people that are waiting for this housing bubble to collapse, again, have missed out on appreciation this year by waiting to buy. And so when we look at, again, the last market bottom cycle, we had 8% appreciation over the next year after the bottom, even with almost $2.5 million homes, in inventory. You could see that was during the last bottom cycle, where real estate, the bottom was kind of January of 2012. And then real estate after that started its ascend upwards again after the mortgage crisis. And so when we look at, again, the numbers from 2012 at that 2.4 million homes available, fast forward 11 years later to today, we have less than half of that available today than we did in 2012. We have an inventory issue. That's why prices have not dropped a lot. I hope that this helps. Let me stop the share here. And if you have any questions on this, if you want a copy of the recording and PowerPoint presentation, I'm happy to send that to you. Let us know if you have any questions at all. If you want a current synopsis of your real estate portfolio, our team's happy to go over your situation, whether you want to do a cash out refinance, consolidate debt, look at buying investment properties, your first home, or anybody that we can just educate on the real estate market, whether you're buying, selling, refinancing, not anytime soon, it doesn't matter. We want to just be a resource for you and anyone that you know that's interested in real estate and wants education. Make it a great day. Thanks for watching, and we'll talk to you soon. Take care.